Did you know that low interest rates are as good as free money? Well, let me do a little bit of explaining in case you're not familiar with how financing works. Let's say that you want to purchase a house that's $650,000. You have $150,000 to put down, and then you need to borrow the rest. The interest rate will impact if you can borrow $450,000, $550,000, or anything in between. Many buyers get hung up on the dollar amount, but in reality, when you qualify for a loan, it's based on the principal and interest payment, not the dollar amount of the money being borrowed. So let's look at a 30-year conventional loan for $500,000. I've got a little bit more explaining below, just in case you need to see it on paper. If the interest rate was 3.75 a few months ago, your principal and interest payment would be $2,315 per month. The bank says you can pay this amount within the safe debt to income ratios. So if the interest rate drops to 3.375, your principal and interest payment would only be $2,210 per month for the same amount of money being borrowed. You could either save $105 every single month by keeping the price of the home the same, or you could max out your payment, which you would safely be allowed to do, and afford $23,000 more towards your new home. That's this bathroom. So with that said, with the same payment, lowering the interest rate is an incredible way to get free money. So yes, interest rates have dropped that much in the last few months. We don't know what they're gonna do in the future, but if you buy now, they're as low as they've almost ever been. So the chances are that they will probably go up and not continue to fall. So if you haven't been pre-qualified lately and you're considering a build, you should definitely talk to a lender, we have one, and see what you can afford today. It's probably more than you think.